Imagine owning just 5 stocks and letting them work for you while you sleep. These aren't meme stocks or risky bets. These are industry giants dominating trillion-dollar trends like AI, clean energy, pharma innovation, and digital infrastructure. In this video, we're diving deep into 5 high-conviction stocks, including a healthcare powerhouse exploding 200% in 3 years, a tech legend quietly leading the AI revolution, and a Canadian giant paying monthly income like clockwork. Stick with me till the end, because this list could literally shape your portfolio for the next decade. Stock 1. Microsoft Corporation, MSFD, Tech Sector. Current price, May 2025, $454.86. Market cap, $3.38 trillion. Sector, technology, software, cloud, artificial intelligence. Microsoft is more than just a company behind Windows and Office. It's a global tech titan with dominant positions in cloud computing, AI, cybersecurity, and enterprise software. Over the past decade, it's quietly transformed itself from a tech dinosaur into one of the most innovative and dependable growth machines in the world. Let's look at the stock's performance. 2022, $250. 2023, $330. 2024, $400. 2025, $454.86. That's nearly 70% growth in 3 years, driven not by hype, but by real earnings power and innovation. So, what's fueling the sustained growth? The biggest game changer has been Azure, Microsoft's cloud platform. It's now the second largest globally, just behind AWS, and growing at a faster pace in enterprise adoption. More importantly, Azure is deeply integrated into businesses via Microsoft 365, Teams, and AI tools, making it hard for customers to switch. Another catalyst? Artificial intelligence. Microsoft's strategic investment in OpenAI, the creators of ChatGPT, allowed it to embed advanced AI into almost every product, from Office to security to code generation tools like GitHub Copilot. These aren't just features, they are productivity multipliers for businesses. Microsoft's strength also lies in its diversified revenue base. It earns from subscriptions, Office 365, cloud services, Azure, gaming, Xbox and Activision Blizzard, LinkedIn and GitHub, enterprise cybersecurity. All of these are growing segments. Financially, Microsoft is a fortress. With over $60 billion in annual free cash flow, consistent dividend increases, and aggressive buybacks, it's shareholder-friendly without sacrificing innovation. From a long-term perspective, Microsoft is the perfect mix of growth plus stability. It plays in trillion-dollar industries like AI, cloud, and enterprise software. As businesses digitize and automate, Microsoft stands to gain for the next 10-plus years. Backhand index pointing right. If you're a long-term investor looking for safety, consistent growth, and exposure to future tech trends, Microsoft should be on your watch list. 2. Enbridge Incorporated, ENB. Energy infrastructure. Current price, May 2025, $62.66 CAD. Market cap, $136.60 billion CAD. Sector, energy infrastructure, pipelines, utilities, gas transmission. Enbridge isn't your typical energy stock tied to the price of oil. It's an energy infrastructure powerhouse, moving 30% of all North American crude oil and 20% of U.S. natural gas through its pipeline network. The real magic? Its earnings aren't dependent on oil prices. Instead, they're based on long-term, fixed-fee contracts, making cash flows incredibly predictable. Let's talk price performance. 2022, $42 CAD. 2023, $39 CAD. 2024, $36 CAD. 2025, $62.66 CAD. That's a flat trend over 3 years. But Enbridge wasn't meant to skyrocket. It's meant to pay you while you wait, and it does that well, with a 7.3% dividend yield paid monthly. So why did the stock dip and then recover? In 2022 to 2023, rising interest rates hurt all dividend and utility stocks. Investors shifted away from yield plays. But by 2024, market sentiment began shifting. Enbridge proved that its regulated business model, with 98% of its EBITDA coming from long-term contracts, could weather any economic storm. The company is also adapting. It's investing billions into renewable natural gas (RNG), carbon capture, and hydrogen infrastructure. So while fossil fuel demand is expected to plateau, Enbridge is pivoting to be a leader in clean energy transport. Cash flows remain stable, $15+ billion annually, and support both the dividend and major capital projects. The management's dividend growth history spans over 25 years, making it a dividend aristocrat in the making for Canadian investors. For long-term investors, Enbridge offers reliability, income, and energy transition upside, a rare mix. It's a great stock for those who want passive income, inflation protection, and a stable play in the North American energy backbone. 3. Eli Lilly and Company, LOI, Healthcare Sector. Current price, May 2025, $715.20. Market cap, $677.82 billion. Sector, pharmaceutical/biotech. Eli Lilly is quietly becoming one of the most profitable and forward-looking pharmaceutical giants in the world, thanks to its blockbuster obesity and diabetes treatments, which have transformed its revenue model. Let's look at the numbers. 2022, $280. 2023, $380. 2024, $630. 2025, $715.20. That's nearly 200% growth in 3 years. And it's not just a rally. It's backed by fundamentals. The star drugs? Mounjaro, tirzepatide, for type 2 diabetes, and Zepbound for weight loss. These drugs became global hits with skyrocketing demand from both patients and doctors due to real, sustained weight loss results and manageable side effects. Obesity is a $100+ billion market, and Eli Lilly is dominating early. Its drugs are setting the standard, with reimbursement already approved across major insurers and governments. Beyond that, Eli Lilly has a pipeline full of Alzheimer's treatments, cancer immunotherapies, and autoimmune therapies. Its Alzheimer's candidate, donanemab, showed significant cognitive slowdown in clinical trials, a breakthrough in a previously stagnant field. So why is this a long-term stock? Pharma companies usually face patent cliffs, but Eli Lilly is a pipeline machine, continuously refreshing its revenue with new drugs. It invests over $8 billion per year into R&D, which is one of the highest in the industry. With over $40 billion in expected revenue for 2025, margins remain strong, and is returning capital via dividends and strategic buybacks. The company also benefits from defensive characteristics. Healthcare spending is inelastic, meaning people don't cut back even during recessions. If you're looking for a long-term stock with explosive growth plus healthcare resilience, Eli Lilly is a top contender that continues to outperform expectations. 4. Brookfield Asset Management BM, Financial Sector/Infrastructure. Current price, May 2025, $57.24 USD. Market cap, $93.72 billion. Sector, asset management. Infrastructure, real estate, renewable energy. Brookfield Asset Management BM is Canada's crown jewel in the global financial sector. It's not a bank or a hedge fund. It's a real assets-focused alternative asset manager that operates and invests in infrastructure, private equity, renewables, and real estate worldwide. Here's how the stock has performed. 2022, $35. 2023, $28. 2024, $38. 2025, $57.24. It dipped in 2023, primarily due to rate hikes that hurt infrastructure valuations. But the bounce back? Pure fundamentals. BAM manages over $900 billion in assets, including through affiliates like Brookfield Infrastructure, Brookfield Renewable, and Brookfield Properties. Its business model earns fee-based income. That means it gets paid whether markets go up or down. It's like earning rent from the global economy. During 2023's downturn, BAM leaned into its long-term strategy, buying undervalued real assets, especially renewables and data infrastructure, expanding presence in India, Brazil, and Middle East, raising record private capital from sovereign funds and pensions. As of 2025, Brookfield's funds are deployed across critical infrastructure like toll roads, clean energy, water utilities, and even digital assets like data centers. Its recurring revenue model makes it resilient and cash flow positive, even during recessions. Management is committed to increasing fee-related earnings by over 15% annually for the next 5 years. Why is this a strong long-term bet? It offers exposure to global megatrends, infrastructure build-outs, energy transition, and urbanization. It has an owner-operator mindset, with skin in the game from Brookfield Corp. Its assets offer inflation protection and downside resilience. If you want to invest in the backbone of the modern world, utilities, renewables, data, transportation, Brookfield is your gateway to global infrastructure wealth. 5. Amazon.com Incorporated, AMZN. E-commerce and cloud computing. Current price, May 2025, $203.10. Market cap, $2.16 trillion. Sector, consumer discretionary plus cloud. Amazon is no longer just the everything store. It's evolved into a technology empire with booming segments in cloud computing, advertising, and AI infrastructure, making it one of the best long-term stocks for diversified exposure to digital trends. 3-year price movement. 2022, $1.95. 2023, $1.10. 2024, $1.50. 2025, $203.10. That's a clean 100% return, showing strong momentum after years of post-COVID slowdown. What caused this rebound? AWS, Amazon Web Services, recovered growth after a brief slowdown in 2022 to 2023. It's now capitalizing on the AI-as-a-service revolution, partnering with startups and Fortune 500s alike. Amazon doubled down on AI investments, launching proprietary large language models, and hosting AI training chips via AWS. Meanwhile, its logistics business hit profitability, thanks to robotics, drone deliveries, and automated fulfillment. Amazon Ads, too, is a hidden gem, now a $50+ billion annual revenue segment, rivaling Google in e-commerce-related search ads. On the consumer side, Prime memberships hit record highs, and Amazon's push into healthcare via One Medical and Amazon Pharmacy adds another vertical to its empire. Why is Amazon a long-term must-own? It dominates multiple industries: e-commerce, cloud, advertising, logistics. It's founder-driven with a culture of reinvestment and innovation. It's cash-rich and operating at scale, improving margins every year. If you want a future-proof portfolio, hold it with exposure to tech, AI, advertising, and logistics. Amazon delivers across the board. Let's quickly recap the 5 long-term powerhouse stocks we covered today and why they deserve your attention in 2025 and beyond. 1. Microsoft, MSFD, the ultimate long-term tech giant, dominating cloud and AI with unmatched stability and scale. 2. Enbridge, ENB, a monthly dividend machine powering North America's energy backbone with low-risk, long-term cash flows. 3. Eli Lilly, LOI, a pharmaceutical leader revolutionizing obesity and Alzheimer's treatment with explosive growth potential. 4. Brookfield Asset Management, BAM, a global asset manager giving investors access to real assets, infrastructure, and renewable growth worldwide. 5. Amazon, EMZN, a tech empire with unstoppable momentum across e-commerce, cloud, AI, and digital advertising. Final thoughts. These aren't short-term plays. These are long-term conviction stocks that can help you build real wealth over time. Whether you're a beginner or seasoned investor, adding even a few of these names could transform your portfolio over the next 5, 10, or even 20 years. If you got value from this video, smash that like button, subscribe for weekly stock insights, and comment below which of these 5 stocks are you holding or buying next.